Welcome to Sectors Up Close. I'm Elena Casas. Today we're talking about investing in Japanese stocks, and my guest is MarketVector CEO Stephen Schoenfeld. Japan's Nikkei 225 has surged over 40% in the last year to hit its first record high since 1989, officially recovering from one of the longest dips in equity market history. A lot of that is down to the role exporters play in the economy. Companies such as Toyota have benefited from rising foreign sales and a falling yen. But Japan hasn't traditionally been a safe bet for foreign investors. Shareholder returns are paltry amid opaque systems of cross-shareholdings limiting outside influence on company boards. And there continue to be serious macro headwinds. Japan continues to limp along economically, deflation persists, and it continues to face the demographic challenge of an ageing population. So why should foreign investors pay attention now? Let's ask MarketVector's Stephen Schoenfeld. Stephen, hi, thanks for joining us. Now, I know you think the Japanese economy is turning a corner, but after years of deflation, is it really?
So this has been a transition that's been a long time coming. The Bank of Japan and Ministry of Finance have been pushing toward it. You see very significant indications that we are going to move to a positive interest rate environment and that deflation is ending. Government officials, analysts are very cautious after being burnt many times, but all indications, both from the bond market and the equity market, are that Japan's going to emerge from a deflationary environment, and that is a sea change for the Japanese economy. You're seeing the Japanese markets already adjusting to this.
In your notes, you mentioned that 39% of companies in the TOPIX, the broader Japanese index, are trading below their book value. This has been the case for a long time, and the Tokyo Stock Exchange has asked companies to improve their valuations and returns. But is that really changing?
It absolutely is. The exchange is creating incentives, but more importantly, the market is. Investors are changing their behavior. Corporate boards are loosening and divesting from cross-shareholding. Activist investors are able to get on boards and unleash this value. So for the first time in decades, having these stocks under price, with very low price book is an opportunity for value investors.
What about the broader picture in Japan, particularly demographics and the shrinking working population? Isn't that a long-term drag on Japanese companies?
The decline of Japan's demographic has been underway for a while. There's still a large working class population. There's still youth going into the market and finding jobs. It's actually a hot job market. But the key to support this older generation is greater investment returns. And so the government has dramatically changed the rules around their NISA, which is a savings plan, to allow and encourage more investment in equities. And we hope we will see the proverbial Mrs. Watanabe, the household purse strings in Japan, start to invest more in equities. We're beginning to see signs of it.
If foreign investors are new to the Japanese market, then which sectors do you think are most interesting?
So foreign investors aren't new, but they've been underweight. And now they face a decision whether to go with the larger cap, export-oriented stocks that have led this rally, which is why the Nikkei is higher than the TOPIX and other broader markets, or bet on the broadening of this rally. We think that foreign investors, as they deploy more capital into Japan, should look for the value both in the larger and mid-cap stocks. There's still enormous amount of value to be unleashed. Quality factors, we think, are going to dominate going forward.
I meant, though, that if one is an investor new to the Japanese market, which sectors do you think one should be looking at?
So if you're new to the market, as you've heard from me before, we think you should take a broad-based index exposure as a start, perhaps with a quality or value tilt. And then, of course, there are significant story stocks that are compelling. Everyone was goo over EV a year ago and 2 years ago, but in fact, Japan's Toyota stuck with their hybrid strategy, and they're really benefiting in both the local market and the global market. So sectors would be the exporters, the tech companies that benefit from the semiconductor drive. That would include Tokyo Electron and the aforementioned Toyota Motors.
How have you decided to pick and choose here, Stephen? How is MarketVector's Japan Quality Index different from, say, the MSCI?
So it's similar in that it's market cap weighted. It's broader than the Nikkei 225, but it's very different in that it emphasizes the largest 500 companies in Japan, weighted by a combination of float-adjusted market cap and quality factors. Quality factors include value elements like low price equity ratio, low book value. We believe these will outperform again as the market broadens.
Stephen Schoenfeld of MarketVector, thank you so much for that analysis. And that's your look at Japanese stocks. I'm Elena Casas, and this is Reuters.